Michael Burry, an American hedge fund manager and authority on stock market analysis. Burry became wealthy by accurately foreseeing the 2008 financial crisis. What will happen? A downturn or something even worse perhaps? It all depends on how we look at it. And Michael Burry does have some advice for us on what to expect. So today we're going to discuss what's worse than a recession and how you can protect yourself from it. Hey guys, welcome to Investor Facts, where you can learn about investing and how to make the best financial decisions for your life. Make sure you click the subscribe button and enable the notification bell if you haven't already. Share, like, and comment. We are all familiar with the 2008 financial crisis, sometimes referred to as the Great Recession. The incident served as a wake-up call that not everything can go as planned, and that we should always be prepared for the worst. Whereas a financial crisis might be a terrible moment for normal people, based on quotation by American investor Robert Kiyosaki, it can also be a great time for the wealthy. Additionally, it is a terrific time for a seasoned investor. On the positive side, this remark is entirely accurate. Burry has made assertions of this magnitude before. He has foreseen a similar circumstance in the past, which ultimately materialized. Though I'm certain you and I won't wish that to occur because we are all aware of the potential repercussions. Burry shut down his website, where he regularly offered advice on selecting the best investments in the year 2000. Later, he established Scion Capital, his own hedge fund, and then, within 4 years, he was now in charge of a staggering $600 million. It got to the point where he had to turn down new client money in order to concentrate more on the investment agreements he had with his existing clients. Burry spent a lot of money studying before reaching that point. Since he was so passionate about starting his own investment firm, the majority of his studies were what enabled him to make wise investment decisions and drew more people to join him. Burry's high level of knowledge enabled him to foresee disaster because of it. This caused him to constantly alter his investing strategy whenever such a thing was going to take place. Some of Burry's clients withdrew their invested capital because they disapproved of his choice to short the market as a result of his analysis showing that subprime mortgages and their associated bonds were likely to lose value. They didn't possess the same level of insight as him. Therefore, it wasn't their fault. Nevertheless, in the long term, Burry, as well as the investors who put their faith in him, greatly benefited from his prognosis. This demonstrates how, at some point in his life, being willing to take chances that other people don't support can truly change your course. Due to his forecasts, Burry is now a well-known figure on a global scale. Many people follow him on social media, and they are eager to see his latest update. Michael Burry is a fantastic example of value of investigation and fact-checking. Prior to actually making his disastrous purchase, he studied the subprime mortgage market for months, poring over data. In the end, this thorough analysis and planning resulted in excellent results. You shouldn't really be surprised by Burry's newly deleted September tweet on a crypto market meme and SPAC collapsing. If any of these continue to worsen, you can draw on this and reconsider your decision to avoid suffering any kind of loss. You may believe that the economy isn't deteriorating enough to produce a deeper recession, but given the various situations that are taking place, you might be mistaken. In light of the sharp decline in the S&P 500 index, you should exercise caution. Investing in businesses that will probably be less harmed by a market collapse is one way to stay safe. Diversifying your portfolio is yet another way to keep yourself safe. This entails making investments in a wide range of asset types, including bonds, property, and cash. You may reduce your risk and shield your portfolio from loss by diversifying. Many individuals believe that the 2008 stock market collapse signified the end of a mistake. Although, as we now all realize, this was far from the truth. The market has more remarkable booms and busts in store for us in the coming months than the Great Recession, which was merely a blip on its radar. Since its peak in November 2021, the price of Bitcoin has decreased by 66%. After reaching $65,000, it could fall as low as $19,000 by October of 2022, confirming Burry's prediction of worsening collapse. The ultimate responsibility is now on you to use extreme caution when making any kind of investment. So diversify your portfolio and avoid putting all of your eggs in one basket. Burry cited a variety of elements like excessive debt levels, inflated asset values, and investor complacency that he believes are preparing the ground for a further major market drop. He urged people to start getting ready for the next crash because he said it might happen sooner than everyone anticipates. Burry compared the current state of affairs with the levels in December 2007, and based on his assessment, we are undoubtedly in a mess. Burry likened the current financial crisis to a crowded theater with a meager exit, where investors hurry to leave the market, they both crush others or get trampled on. Other countries are taking a variety of measures to try to slow the dollar's rise against their currencies, while others allow their currency to float more freely. Others use the foreign exchange market to buy dollars and buy their own currencies. In order to make their currencies more appealing to investors, some nations are also increasing interest rates. The value of the pound recently hit a historic low versus the US dollar, falling to 1.1407. The last time this occurred was on February 26 of 1985. One of the economists who has supported Burry's claim regarding the impending great disaster is Greg Jensen, chief investor of Bridgewater Associates. Jensen claims that due to the recent recession and severe crash, it is essentially impossible for prices to return to the way they were before COVID-19 pandemic. We are yet to touch the bottom, says Burry. How probable is this? We are undoubtedly on the verge of a disaster bigger than the Great Depression if we continue to experience a crash that is more catastrophic than what has already occurred. The recovery from high inflation rates of COVID-19, the Terra Luna crash, the Russian-Ukrainian war, and supply chain concerns all contributed to crypto crash, which saw a sharp decline in price starting in May. The demand for cryptocurrencies decreased as a result of each of these issues, which also caused prices to fall. Many people had made significant investments in cryptocurrencies with the intention of making a rapid profit, which worsened the crisis. When the prices started to drop, they began to dispose of their holdings, which caused the prices to drop even more. What does this market crash literally mean? Given everything that has been said, an abrupt and significant drop in asset prices is known as a market collapse. It often occurs during a time of panic selling and therefore can significantly affect the economy. Even though a market crash can happen in any asset market, it is most frequently linked to the stock market. Usually, a rapid unanticipated occurrence that makes investors lose faith in the market's prospects for the future sets off a market crash. As a result, assets may be sold off quickly and dramatically as investors try to get their money out before prices fall even further. Market collapses can have a knock-on impact on the economy because they can erode investor trust in financial system, reduce consumer and company spending, result in the closure of enterprises, and result in job losses. However, when a bubble pops, the value of the asset typically falls precipitously, often resulting in a generalized economic disaster. Whenever a financial bubble pops, investors are often the ones who suffer the most. This is due to the fact that they frequently have substantial sums of cash invested in an asset that has decreased in value. Nonetheless, since the economic downturn that accompanies the financial bubble burst may cause lost jobs, pay cuts, and a decline in total expenditure, non-investors may also be impacted. Now, with the odd statement that Michael Burry is solely focused on in one commodity, namely water, the movie The Big Short ends. This remark is merely an eye-opener to inform you about Michael Burry's activities and how you might incorporate his trading strategies into your own. It shouldn't prompt you to think too deeply. How is investing in water even more conceivable, you may ask, particularly now that commodities such as oil and gold are traded in future market? You shouldn't be shocked, though, given that water has only recently entered the trading market. If we don't take quick action, you can end up being one of the many people who were unaware of the recent changes. As the American founding father Benjamin Franklin famously observed, when the well is dry, we recognize the importance of water. Burry's predictions should be heeded because he has a track record of correctly predicting major market changes. He accurately predicted the collapse of the housing market, and now he's predicting a more severe collapse in the future. Investors must be ready for the economic meltdown that is currently occurring. That's all for now, folks. Thank you so much for watching this video. I hope you found it useful. If you did, please subscribe and hit the bell so that you can get notified whenever I upload a new video.